Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from John Rubino. You can find John over at his Substack report, and we'll put a link to that down below. And John, it's always great getting you on the show every month or so just to get your thoughts on what you're looking at from the macro side of things and from the micro side of things within the resource sector. I know that there was some big news out of Russia just recently with regards to silver. We were talking a little bit about it off mic. Maybe give everybody listening in some insights as to what Russia has done as far as its strategic precious metals reserve fund.
Hey, Shad. Yeah, Russia has a strategic precious metals reserve. I don't think anybody knew that before this last announcement, but they had been buying and holding gold and platinum and palladium, but not silver. So they just announced that they're going to add silver to their mix. Now, they didn't give any numbers or anything. We don't know how many rubles that means or how many tons of silver or whatever. But, Russia sells a lot of oil. Even now, with all the sanctions on them, they still have pretty massive cash flow from selling oil to China and India. So they've got money that they can throw at silver if they want to. So it's possible that in a small, thinly traded market like silver, Russia's new buying will move the needle to an extent. We'll have to see. But other things being equal, it is definitely a good thing. We'll just have to see what the numbers are going forward to know whether it's a spectacular thing or just a modest positive.
Well, and John, we were talking off mic as well that in a lot of countries that are typically big gold buyers, like India, also is seeing this in Vietnam and to a lesser extent some other countries in Asia, that there's also been an influx in new silver buying. Is it one of those situations where gold has escalated in global currencies to such a degree that poor man's gold, aka silver, is becoming more attractive to buyers?
Yeah, that's definitely part of it because people in Asia give gold and silver jewelry as wedding gifts. And when gold goes way up, naturally there's a shift to silver because a lot of people just flat out can't afford what it would cost to give the usual amount of gold jewelry. So they shift to silver and silver demand goes up. And, you're seeing India import more silver than usual now. China is always importing a lot of silver because they're the world's biggest solar panel maker, and solar panels use silver. So, yes, gold going up definitely pulls demand for silver up. And that's no doubt happening in Asia right now. So, yeah, most of the stories for silver right now in terms of supply and demand are very positive because silver is used in military applications where there's not really a substitute. Solar panel installations are growing dramatically, and the new generation of solar panels use more silver than the previous generation. And you get the divergence between gold and silver, which is favorable for silver. So there's a lot of reasons to think that demand for silver should rise pretty dramatically. And this takes place in a market that's in deficit. The world's mines aren't producing as much silver as the world is using. So we're running through silver stockpiles. And there was one analysis out just lately that said, at current rates, we're looking at 18 months to 2 years to completely run through all the above ground silver we have left, and I can't verify that report or I've never done the basic research there, but somebody did come out and say our research indicates that this is the case. So yeah, the story for silver looks pretty good right now. And I think that it's possible that the Russia thing being very high profile and kind of specific will have a good impact on the silver market in the short run.
Yeah, and to the point about not really having as much mine supply, I mean, most of the silver that's mined, I think 70% of it is a byproduct of base metals mining. So your copper, your zinc, and your lead mining leads to some silver production, but 30% is in the primary silver producers. But when you think about that, there has been in the industry, even recently, John, some pretty high profile M&A deals where silver companies are looking to lock up some of that best supply. Two transactions that stick out recently are the Gato silver takeover by First Majestic after they had kind of gone into Nevada with gold and violated their one country, one metal theme. They've shifted back to Mexico and silver again. And that was a nice deal, nice transaction. It should help First Majestic, but it's clearly taking one of the big silver single asset producers off the table. And then just recently, in the last couple of weeks, we saw the news out that Silvercrest is being acquired by Core Mining. And again, Silvercrest had about the best margins and was one of the lowest cost operators in the sector. I think the only company that even compares is mag silver. And now Silvercrest, which was a viable investment for investors, is also off the game board and being absorbed into a larger company. So what does that leave silver investors with to invest in if they want high margin silver investments, John?
Yeah, it's going to be a shame if all the halfway decent silver juniors and explorers get snapped up right away at modest premiums. Then, all these 10 baggers we were hoping for aren't going to happen. But, the way precious metals M&A cycles usually go is that the early deals are done at unspectacular profit levels for the early investors in the acquired companies. And then later on, the prices start rising and there starts to be kind of panic buying and bidding wars and stuff like that. And then you get the really big deals. But the Gatos and Silvercrest deals actually had a couple of little quirky things that are related to them. For Gatos, First Majestic has been just a dog of a stock for quite a while because they had a big mine not quite work out. And then they bought a silver mine in Mexico and their stock went up, even though they were the acquirer. They paid a nice premium to acquire somebody. Normally that knocks your stock down. But First Majestic has been going up ever since then. So the market likes that deal from First Majestic's point of view. And okay. And then the other one that's interesting is Silvercrest got bought out by Core Mining, who bought it for their cash and their cash flow. So it was actually kind of a reverse financial thing. Normally, a big company buys out a little company that desperately needs capital. In this case, the small company, or the relatively small company, they're pretty good size even compared to Core, but the smaller company is the one with the cash on hand and the growing cash flow. So this was done to help Core's finances, which you don't really see that very often either. But in any event, it's nice if this would be the start of a trend, and I think it probably is, because you see a few deals like this, especially First Majestic. Their stock went up after doing a deal like that. That gets the attention of the other potential acquirers out there. So the question now is who's next? And there's quite a few. Well, actually not in the silver space because there's just not that many silver companies. But in precious metals in general, there's a lot of potential acquisition candidates. Most of the mid-range royalty companies, I think, could be snapped up at any moment. And then there's a lot of high-quality exploration companies and some juniors turning into mid-tiers. And who's starting Equinox Gold. Chad, you got an opinion about them as a takeover candidate? Because they're not tiny, but they could also be bought by a bigger company, and they've got a new mine coming on that looks like it might be a really high quality mine.
Well, I'm an Equinox shareholder because I saw them as the roll-up strategy. They were the ones rolling up other companies. It even was founded when you had Trek Resources and JDL Copper, and there was the Castle Mine in California, which they've now throttled back a little bit. And they had one of Ross Beatty's companies, I can't remember the name offhand, kind of all come together to form Equinox Gold. And then they acquired other companies after that, and they picked up more and more assets. The reason I-80 Gold exists today is because Ewan Downey's prior company, Premier, was taken over by Equinox. So they've been the roll-up, and they even just bought their 40% of the Greenstone mine from Orion Mine Finance that helped them get it built. So now they're really moving into the category where over the next year to 2 years, they think they can get their production profile up high enough that I think it almost moves them into the big boy seat. John, it moves them into a senior. But we've seen seniors merge with other seniors. We've seen Goldcorp snapped up by Newmont. We've seen Newcrest snapped up by Newmont. We've seen Randgold snapped up by Barrick. We've seen Kirkland Lake snapped up by Agnico Eagle. So it would not surprise me to see another larger company say, hey, why don't we combine forces here? And it could be a takeover candidate. I still think they're on the hunt for other acquisitions, but yeah, you could be predator or prey in this kind of an environment, and there are more choices in the gold sector and the royalty sector. But John, I think it kind of ties into a bigger theme that we were talking about off mic, and that is that all of these companies, whether they're a royalty company or the gold producers or the silver producers, should be having one heck of a Q3 here. We had higher silver and higher gold prices than we've seen in a long time for the whole quarter. And while we've had a nice trend from Q4 of last year into Q1 of this year and then Q2, I think these Q3 numbers are going to be eye-popping because most of these gold companies have margins that are about the fattest they've ever been. These are the biggest margins we've ever seen in the industry. Do you think it spurs more M&A? And do you think generalists actually raise an eyebrow and start paying attention to this tiny sector.
Yeah, I'm not sure what earnings surprises do for M&A, but they definitely get the attention of generalist investors because a lot of people look at, for instance, earnings momentum. They run screens that when the arc of a company's earnings are steepening, that shows up on that screen. And the premise is that if your earnings are growing at an increasing rate, then you're doing something really right. And historically, companies in that boat tend to go up because they report better and better numbers. So now the miners are showing up on screens like that, which means that, a lot of people who might not understand mining, but do understand earnings momentum, may be paying attention soon. And that leads to the people who pay attention to price action, because if the earnings momentum guys come in, buy up the miners, and the miners start to rise at an increasing rate, then the momentum guys jump on board, and then you get your typical precious metals bull market where it almost goes straight up for a couple of years. So it would be awesome if that's what's happening right now. But the pieces are in place because second quarter earnings were good for a lot of the high quality miners who kept their costs under control. And so they have good cash flow now and they have rising earnings. And third quarter numbers, other things being equal, are going to be better because gold and silver both went up, gold especially, in the third quarter. So you would expect the numbers that were good in the second quarter to be even better in the third quarter, which is rising momentum, So normally that can set off serious bull markets. So we'll have to see if it goes that way. But I think if gold and silver hold up, or Lord willing, keep increasing from here, then that trend is going to be firmly in place with fourth quarter earnings. Geez. So we're close. And there's no reason to think that it's not possible right now. So this could be a really good stretch. Oh, and seasonality is kicking in right now too. So we've got very good earnings for the miners at the same time that gold and silver normally do well because of the whole Asian buying thing that we talked about. So there's a lot of pieces falling into place, which of course means that it could go exactly the opposite way. That's how life works sometimes. But there are definitely a lot of historically significant things happening that are pointing in the right direction for precious metals miners right now.
Yeah, absolutely. And I think it's going to, like you say, put it on more radars of people that are just watching the earnings momentum. The reason I threw M&A in there is because the reason we saw Silvercrest taken over is because exactly that. They were having fat margins, and Core Mining, and I'm sure other companies were looking at it as a way to boost their earnings potential. I think the same thing could be said for Gatos. It was kind of a cash cow there. It had been on a run for the last 2 years, and it's going to help First Majestic's numbers. I just wonder if there's other senior producers or even the mid-tier producers looking at bolt-on applications where it's easier to buy production that's already permitted, already has a social license, already has the sunk cost in place, than it is to develop new projects. So I just wonder if we'll see more M&A that way, or do you think it's finally time for some of the development projects to come off the sales rack and get picked up by some of these companies?
Oh yeah, all of that is true. All of those factors are at play right now because most of the really big miners are not replacing their reserves with their exploration programs. So they need to go out and buy new reserves. That's kind of a perennial thing for the mining industry right now. The big guys just they take more out of the ground than they discover. And there are a lot of reasons for that, including declining grades and geopolitical turmoil where you can't just mine anywhere you want to anymore. And I think that's definitely going to be a factor. And there really aren't that many needle moving potential acquisitions out there. So if you want to get one, if you're Agnico Eagle and you would like a big pop in your reserves and in your future earnings from an acquisition, it's reaching the point where you kind of have to decide and go for it, because you're probably looking at 5 or 10 possibilities, and then you see 2 of them get bought, and you see a couple more with prices that are moving kind of suspiciously. Well, that leads you to go grab the other 5, or something like that. And that's how these bull markets work in M&A and in prices. So I think we're there, and I think all these reasons will play into it. So now it becomes a question of correctly choosing the mix of acquisition candidates that you want in your portfolio, because some of the things that happened are surprising. I thought Silvercrest was a surprise because they didn't look super cheap and they were profitable and stuff like that. So they didn't need capital at all. In fact, they had a challenge facing them of what to do with all their extra cash. You know, do you send it back to shareholders with dividends, or do you buy bullion and just keep it on your balance sheet? You know, what do you do? Which is a problem everybody wants to have, but it's not normally the kind of problem that leads a company to put itself up for sale. So anyhow, yeah, I might have made the mistake of buying way too many juniors and explorers in this space. So, you know, I might have some of the really good takeover candidates, but they're mixed in with a lot of companies that might still languish. You know, I think some pruning is in order. At the same time, I really want to be looking at loading up on the ones that look most obvious as takeover candidates going forward.
Well, and we have seen even in the gold and copper space some pretty big high-profile takeover deals of development stage projects. Like we did just see Goldfields as a major make a move on Osisko Mining for a very big transaction, and we saw Filo Mining, which is a big copper play up on the border of Chile and Argentina, get taken over by both BHP and London Mining together. So when you look at those deals, people think, okay, wow, who is next? And immediately after those transactions, you saw a lot of respective gold and copper companies spike up in valuation that also have ounces or pounds in the ground. So do you think that that's the environment we're in, where I've noticed about a dozen companies that have had a nice appreciation ever since those transactions, with probably people thinking, hey, they could be next. So are you looking at your own portfolio when you do that pruning with that in mind? Like, who actually has the ounces that these guys want to acquire?
Yeah, because I still think we're in the stage of the market where it's quality that is being bought. So the really speculative stuff that hasn't proved out yet might not be as attractive as somebody like Osisko Mining that they had this huge long list of drill results that were stellar. It was pages of drill results. So they had pretty much outlined their resource. So I think for the time being, quality is going to be the theme in the M&A of this space. So Shad, tell me your favorite takeover candidate and I'll tell you mine.
Ooh, you're switching the tables on me here. Well, I think Skeena Resources is probably one of the ones I was thinking about that did spike after the Osisko Mining Goldfields announcement, because they have not just a quality resource with millions of ounces in the ground and good cost structure, and it's a glowing economic report, but they also have raised their capital stack. And I think that's a big hurdle in this market, especially with how tight the capital markets have been. And they did a combination of debt. They did some royalty and streaming, but they didn't stream their silver. They streamed their gold, which I thought was very smart because it gave them that upside for the silver. And they also have a lot of interest. I met with them in Beaver Creek, Colorado. They have a lot of interest on this antimony they have in there as a co-credit. It's not gotten a lot of investors' attention, but it's gotten a lot of metal smelters' attention. They want that antimony, and it gives them maybe some access to even some critical minerals money. But they did a good job raising the capital to be able to build the project. I'm still not sure if they actually want to build it or if they hope somebody else takes them over to build it. But I see Skeena Resources as probably being a pretty good takeover candidate. That's one on the top of my list.
Okay. Is Skeena the one who's in the Yukon that people are calling the next snow line?
No, Skeena is in British Columbia in the Golden Triangle area. And so they're very close to where Pretium was taken over, and they're kind of there by Ascot and everything. But they have a very big deposit with their Eskay Creek project, but then they also have the Snip Mine, which is an ancillary project, which I think is another kicker to give them longer mine life and to supplement, kind of smooth out their production profile. So I see them as being probably the top candidate in the Golden Triangle.
Okay. All right.
But let's hear yours, John. What's your top pick for a takeover?
Okay. Well, Dolly Varden is kind of an obvious one because, you know, they have a pretty good silver resource. They're finding gold, apparently, I wouldn't say by accident, but nobody was expecting that. And they've got copper. They're right next to a property owned by Hecla Mining. Hecla's already tried to take them over once. And so clearly that's an obvious merger at some point in the not too distant future. And the question is the price, because Hecla's got, you know, because of their proximity and because they already own a chunk of Dolly Varden, they might be able to engineer a price that our other shareholders don't think is spectacular. So it might be one of those, okay, modest premium, no big deal, let's move on kind of things.
Well, I agree 100%. I think Dolly Varden is definitely a setup for a takeover by one of the larger silver producers, and Hecla being next door and having already tried before, and having somebody on the board of directors and also being a 15% stakeholder leads me to believe it'd probably be them as the suitor. But I wouldn't rule out, and I've asked Sean Cocoon, the CEO of the company, this before, could it be somebody besides Hecla? He's like, we're talking to other companies too. So it's one of those things, if you snooze, you lose. But I do think Hecla has a pretty good odds of being the suitor there. But I don't want to see some of these companies go too soon in this precious metals market because they're still doing a lot of exploration work. So let me ask you that, John. When there's a takeover, it's usually a bittersweet moment. Almost everybody that's invested in the company being taken over always feels like it's not enough, or it came too soon, or there were so many more catalysts, or they wanted to see it re-rate higher. But then if they don't get taken over, it doesn't get any money circulating. And sometimes the new combined companies can be more of a force of nature. So are you just happy to see a takeover whenever they happen, then move on and circulate the money? Or are there some that you hope don't get taken over too soon?
Well, I hope none of them get taken over and they all do a Great Bear Resources, where, it went from 39 cents to $24 and then it got taken over. So that's the ideal scenario, is when something just really works out and they keep reporting good news and good news and good news, and the stock keeps going up and up and up, and then somebody buys them out. So that would be what I would like to see with all of these things. But that's not how this market works. You have a process where the deals are reasonable at first, and then they're exciting, and then they're spectacular. But during the spectacular part, that's when the big miners are overpaying and they're doing deals that they're going to regret later. But they can't help themselves because they have to be the biggest in their area. They got to build that empire. So it's bittersweet from that point of view, is that these guys are making mistakes, but you will sell them your junior miner stock at the price that they're offering. So my ideal scenario would be for most of the stocks that you and I are looking at to hang in there and do their thing and then get swept up in the final part, the mania, with some really big premiums. And I know that that's not possible because that's not how it works. But I would love to see that with the majority of the stuff that I own.
Well, just maybe one more follow-up on this. Some people we talk to, we ask them, does M&A play into your thought process when you're looking at positioning? And some people say flat out, no way. I don't care at all if they get acquired. I'm looking at, a spreadsheet with their valuation, the value they're building with the ounces in the ground, or they're drilling, and the economic studies they put out. And other people say 100%. I want to find companies that I think are the next takeover targets. How do you look at it? Do you have the takeover as something in the back of your mind that you're not really that concerned with, or does it play into your thought process when you're positioning in these companies?
Well, I want something that's a potential 10 bagger, and how it happens doesn't really matter that much. But, if you're looking at an explorer, you want them to find way more gold or silver than is expected right now. You want them to have pleasant surprise drill results. And then other things, maybe they buy some property nearby and then they find something there that nobody expected. So you want them to grow their resource in a way that revalues their stock. And then, okay, they can go ahead and put a mine in there and become Silvercrest or something like that. That's fine. Or somebody can buy them for an unreasonable amount of money because they're projecting recent drill result progress into the distant future. That's fine too. So I tend to look at it less operational. Well, I'm hoping for good operational news, but I'm just thinking, okay, multiple of the current price. So it's 5 bagger, it's a 10 bagger. And so I kind of anchor on the multiple of the current price rather than any kind of operational result specifically.
I guess I'm going to ask you even one more. I thought that was the last one, but I've got one more for you, John, on M&A in the royalty space, because you brought it up. I think it's an interesting topic. I think a lot of people agree we want to see more consolidation, and people will say that about the royalty space, but I would point out we've already seen a lot of consolidation. I've been part of Ely Gold being taken over, Golden Valley being taken over, Altus merging with Elemental to form Elemental Altus. We saw Nomad taken over. We saw Mavericks taken over. We have seen a lot of M&A. Now, a lot of people at Beaver Creek were buzzing that, hey, there's at least one or two royalty companies that are the smaller junior companies that are going to probably be next on the menu. But we've also seen some companies in the gold producer space, majors acquiring majors. Could we see some of the big boy royalty companies acquire each other and form massive like super majors? Or do you think it's something where eventually we're left with just a handful of these companies and they have all the royalties? How do you see the consolidation playing out in the royalty space?
Well, the valuation difference between the giants and the smaller companies in this space is pretty dramatic. It's like twice. The smaller ones are only half as valuable in terms of net asset value or net assets than the big guys are. So that means the big guys can use their richly valued stock to buy assets that they completely understand, that it's very easy to analyze. And then, you fold that into, if you're Wheaton Precious Metals, you buy Sandstorm or something like that, fold their assets into your portfolio, and they're instantly revalued at your multiple of assets. So it's kind of a no-brainer for a lot of these guys, I think, because the assets are fairly easy to understand and value. And because of that, when there's this kind of an arbitrage, because it really is an arbitrage. I mean, there's this instantly revaluing assets that everybody can just look at and understand, that it would be a surprise if it didn't happen. And the big guys are largely debt free. They have positive cash flow. They have huge borrowing power. So, to pay $1 billion in sum for Sandstorm or Triple Flag or something like that, or it would be 2 trillion and change for Triple Flag, I think. That's not a big deal for them at all. So I would expect that to happen going forward. And, at the same time, the mid-range guys can be buying out the little ones too. There's no reason why there can't be multiple roll-ups going on at the same time. But I think in the end, we have just a relative handful of royalty companies out there. And then I think we start seeing them spin off, non-core assets into smaller royalty companies and just start the whole thing over again. So there's no reason why there has to be any kind of a steady state in that market, because, mines are these big illiquid things. You can't move a mine from one place to another. You need a lot of people to manage it and everything, and a portfolio of royalties. I think Franco-Nevada used to say that their revenue per person was the highest in the stock market. It was some stat like that. Like nobody else makes as much money per employee as a big royalty company does. So, it's a great business model, and there should be a lot of action going forward.
Yeah, John, it is a great business model, and it's way more diversified in its risk than individual company risk. Mm-hmm. But yeah, you could have 8 to 10 employees and have an empire that keeps growing. You could double the amount of royalties, and you really wouldn't need that many more people on staff. So it's an interesting business model. I'm sure we'll see more consolidation there, especially at these higher metals prices. But I think we're going to see more consolidation in the mining sector overall. So it'll be fun to follow along with it. And if you want to get John's thoughts on some of the companies he's doing deep dives in, definitely go over and click on his Substack link and check out his writings. I check out John's reports, which you put out almost every day, man. And it's always interesting. Some of it's dealing with the resource sector. Some of it's macroeconomics. Some of it gets into geopolitics, but always interesting. And it's always great having you on the KE report. So looking forward to our next conversation.
Thanks, Chad. Talk soon.